Welcome back to the third tax law module, income. The purpose of this module is to learn the definition of income according to the IRS, review different types of income that are required to be reported on Form 1040, and see the tax documents that clients will bring to support the income to be reported on their return. Let's get started. So which of these do you think is the IRS's definition of taxable income? Is it A, the consumption and savings opportunity gained by an entity within a specific time frame expressed in monetary terms? Or B, whatever income the government feels like taxing? The answer is B. Taxable income is whatever the IRS and the United States Congress say it is in the tax code. We're going to address the differences in taxable income versus non-taxable or exempt income. One of the best sources of taxable and non-taxable income is found in your publication 4012 in tab D, the Income Quick Reference Guide. There are two charts listing all the various taxable, non-taxable, and military income. We will focus on taxable versus non-taxable income only. Earned income is wages and self-employment income, while unearned income is from pensions or investments. The sum of all earned and unearned income is reported on Form 1040 as total income. Non-taxable and exempt income. Non-taxable income is just that, income that is not subject to federal income taxes. Here is a list of the common non-taxable income sources we may see at our sites. Remember, these categories of income are excluded from the tax return completely. We do not need to take them into consideration when preparing the return, with one exception, Social Security. Social Security can be non-taxable depending on the taxpayer's other sources of income, but Social Security benefits will appear on the return even if none of them are taxable. In general, income that is exempt will still appear on the tax return. The income or the portion that is exempt from taxation will not be included in total income. Exempt income includes municipal bond income, portions of certain retirement benefits and distributions, and scholarships used for qualified education expenses. You can find a list of more examples of taxable and non-taxable income in your 4012. If you have any questions, ask your site manager or a more experienced volunteer for guidance. Let's review the income documents that clients will bring in when they come to have their taxes prepared. Wages are reported on Form W-2 wage and tax statement by employers. There are variations of this form, but they contain the same information. Just be sure to pay attention to the box numbers. Employers are required to make them available to employees by January 31st. Some employers may only make the W-2 available electronically, and we may assist clients in printing their W-2s if necessary. If a client hasn't received their W-2 by January 31st, they will need to contact their employer. As with most income documents, you will need to enter the information into the tax software exactly as it appears on the W-2. Include the employer identification number and address, the amount of wages and any federal tax withheld, Social Security wages and withholdings, Medicare wages and withholdings. There may also be information in box 12, the check boxes in box 13, and box 14. Finally, state wages and withholdings are reported at the bottom. They will be entered into the software and used to prepare the state return. If your client has a job in which tips are normal, like a waiter, be sure to ask about any tips they may have received that were not reported. All tip income is taxable, whether or not it's reported to the employer or reported on the W-2. Unreported tip income is an advanced level topic. Self-employment income, or income from work as a contractor or freelance employee, is normally reported on Form 1099 NEC. If a taxpayer received the Form 1099 NEC with an entry in Box 1, they are considered self-employed or they are an independent contractor. This income must be reported on Schedule C. Schedule C is used to deduct business expenses from gross business income and determine the amount of self-employment income and tax. It is rare to see federal income tax withholdings in Box 4 on a 1099 NEC and state tax withholdings in Box 5. Self-employment returns are out of scope for basic certification. To learn how to prepare these returns, you must take the advanced tax training. Another common type of income is interest and dividends. These are reported on Forms 1099 DIV and 1099 INT. These forms look very similar. Let's take a look at 1099 INT. Interest income is in Box 1. If a taxpayer withdrew funds from a different interest account, like a CD, before maturity, they may have paid some penalties. This amount will be deducted from taxable income. If a client cashed in a savings bond, the interest will be reported in Box 3. It's less common to see this, but if there was any tax withheld, it would be in Box 4, and tax-exempt income is in Box 8. Remember, it still needs to be reported on the return even though it is exempt from federal tax. Form 1099-G is used to report a variety of government payments. Here's what we will typically see. Box 1 is used to report unemployment compensation. Be sure to check if any federal income tax withholdings were made. Form 1099-G is also used to report state refunds, which can be taxable for people who itemize deductions in the previous year. A state refund would appear in Box 2. Form 1099 SSA is used to report Social Security benefits in the software. You will enter the amount in Box 5, which is net benefits received for the year, and Box 6 if they had any federal tax withholdings. They may also have Medicare premiums noted in the description, which are also reported on the return. Form 1099-R is used to report distributions from a retirement account including IRAs. If a client has a 1099-R, the first thing you want to check is Box 2A. If Box 2A is blank, you may also see the taxable amount not determined selected in Box 2B. If the taxable amount is not determined, you must have advanced certification to complete this return. So, if the taxable amount is determined, you will enter the gross distribution and the taxable amount into the software. These may be different if the taxpayer paid onto this account with their after-tax money, meaning money they had already paid taxes on. As always, check for federal income tax withholdings in Box 4. The distribution code entered in Box 7 is important. It determines how the income is treated on the return. Code 7 is the code for regular retirement age distributions. These are taxed like ordinary income. If you see code 1 in that box, that is an early distribution. This means that the taxpayer took a distribution out of their retirement before they reached the age of 59 1/2, and there will be a penalty calculated on the return. There can be exceptions to this penalty in a few situations, but you must have an advanced certification if an exemption applies. We'll learn more about the other codes during training. Finally, the IRA SEP simple box next to Box 7 will be checked if the income was contributed from an IRA or a self-employed retirement account. If it is checked, indicate that in the software by clicking on the same box noted in TaxSlayer. You may see other types of income entered on Form 1099 MISC. Other income must also be entered into the tax software, such as gambling winnings, jury duty pay, and scholarships. We'll discuss all of these during training. Let's meet a new practice client, Vanessa. How much of Vanessa's income is taxable? She received a W-2 showing $31,500 in wages, a 1099-G for $800 of unemployment, and a 1099-INT showing $120 of interest. These are all forms of taxable income. In addition, she received a $10,000 insurance payment for medical expenses due to a car accident. The insurance payment is non-taxable and will not appear on her return. As you can see, the W-2 income is entered on line 1A. The taxable interest is entered on 2B. The unemployment income is entered on Schedule 1 and carried to Form 1040 on line 8. That brings Vanessa's total income to $32,420. To summarize, income that is not exempt or excluded is taxed. Only complete returns with income that you are certified to prepare. Be sure to always enter income from the tax forms into TaxSlayer correctly. This concludes the module on income. In our fourth tax law module in this series, we will cover adjustments, deductions, and other taxes. Please be sure to watch each module in order initially to firm up your understanding of the flow of the tax return. Afterward, you can return to individual modules as needed to refresh your skills and to ensure retention of tax law information.